Hey everyone, this is Chaz Patterson. I'm a commercial real estate broker here in Orange County, California, based out of Newport Beach. I just wanted to give you an update on some general market stats across Southern California, from LA County to Orange County, the Inland Empire, and San Diego County across asset classes. I know a lot of times it's hard to get some of the up-to-date information. So here I've got a lot of data that we compiled, a lot of it based out of CoStar data, uh, just as of the end of April. So year over year stats for sales volume, we've got cap rates, the market price per foot for sale prices, and then the 12-month transaction volume is, you see TAM, total addressable market. So it's a percentage of the total addressable market. So, for example, in Los Angeles, in industrial, the total asset value is 303 billion, 950 million in change, right? So almost $304 billion worth of industrial assets in LA County. Of that, in the last 12 months, we've had 3.7 billion transact. So that 12-month transaction volume as a percentage of the total addressable market is about 1.24%. So traditionally, you start seeing more in the 2 to 3% range, but transaction volumes have been lower. We've definitely seen that the last few years, right? Where transaction volumes decreased significantly, especially after the interest rate hiked up, basically doubled over the course of, several months. So here at LA in industrial, we have the 12-month sales volume growth was down 21% year over year. Cap rate's about 5.2%, averaging about $313 a square foot. Obviously, this is going to vary based upon location and age, asset type, specifically kind of exactly how it fits in that industrial space. Is this flex? What's the usage? What's the clear height? And all that. This is just a general market range. Orange County, 12-month transaction volume or sales volume was just down about 1.1% year over year. Cap rates 5.3% on average, $347 a square foot. And again, if you start getting into some of the more prized locations, different quality of assets, you're going to see that price go up to be closer to $500 a foot. Um, and the 12-month transaction volume is total percent of total addressable market, 1.57%. Inland Empire has taken a huge hit in the industrial market, down 17% year over year in sales volume. And you've seen a lot of that happen. There's a ton of building that went on in the Inland Empire, and then basically things have stopped, especially the large logistics. I know definitely of buildings out there where they've been vacant for over a year. They got 1 or 200,000 square feet just sitting there. They're even willing to give a year of concessions and still aren't able to get the buildings leased out. So that Inland Empire market has been hit big time in industrial. Although the cap rates have been sitting lower, 4.7% on average, you can see the price point is much lower than Orange County and LA at $264 a foot. San Diego is down 21.8% year over year, 6.2% for the cap rate on average, and the price per square foot, 325. And they've got a higher transaction volume as a percent of the total addressable market at 2.08%. In the retail asset class, uh, you see an 8% uptick in LA County, cap rates at 5.7%, and things trading at about $417 a foot. Again, that's going to vary depending on the age and location of these assets. Orange County, down 1.4% year over year in terms of the sales growth. Cap rates about 5.3%, $450 a foot. And again, that we see that range from 450 foot. You might see things up to $1,000 a foot, depending on where it's at. So it's just a broad average. Inland Empire, we've seen an increase in retail, 13.7% increase year over year, 6.2% cap rates. Although I got to tell you, I talked to a lot of investors, especially larger institutional investors and REITs looking for retail assets, and they're not looking for anything that's less than a 7 or 7.5 cap. So a lot of these cap rates in this range are likely going to be to smaller buyers, smaller retail properties. Uh, the larger, more institutional type funds are looking for things over a 7 cap and $294 a foot. San Diego basically hung about level with year over year growth, and their cap rates are around 5.7% and $398 a foot. Again, they've a little bit higher in that percent of total addressable market, where 12-month transaction volumes at 2.12%. Multifamily, we saw a huge uptick year over year growth in LA County in multifamily. And again, sometimes there's a heavy skew if there's been a couple of big deals in the last month or two. So sometimes if there's not a lot of assets trading, and then boom, someone takes down a massive apartment building or two, and you have these 2 and $300 million sales, and then that just skews the whole trend. Um, so that'll be interesting to track. Cap rates about 4.9% on average. And again, those are going to be, some are going to be higher, some are going to be lower, depending on, is this class A, B, C, core, core plus, value add, opportunistic, but this is just a broad average. And average sale price per unit, about $358,000 a unit. Orange County, we've seen a decrease in transaction volume year over year, in sales volume rather, 23% decrease, and cap rates down in that mid 4 range. And sale price per unit, $449,819 a unit on average, so nearly 450,000. And again, you're going to see some of these that are over 500,000, and then you're going to have other areas that are going to be in the 300s. If you have some certain units, maybe Santa Ana, something like that. San Diego, um, actually, this is Inland Empire, again, another huge uptick year over year in 12-month sales growth, 76.9%. Again, this can be skewed by a couple of large transactions. Cap rates at 5.1%. So generally, you're seeing the Inland Empire at about half a point higher in cap rates. You see that both in multifamily and in retail here. The sale price per unit, just under $276,000 a unit. San Diego, another huge uptick year over year growth in multifamily, 57.5% increase. And they're at about a 4.7% cap rate on average. And sale price just under 400,000, so $399,328 a unit. Um, and very large, almost 3% in terms of that transaction volume as a percent of the total addressable market. And I can tell you just from experience with institutional funds that I talk to looking for multifamily, there's definitely demand in San Diego. It's a very popular market, not a huge amount of inventory available. So you definitely see a demand down there. The office market, we've all heard this story. It's been, hit the hardest, throughout COVID. You're starting to see it come back a little bit. but there's still a lot of hesitancy there, people trying to figure out what to do with it. You hear a lot of times about people talking about repositioning office, where they're going to turn them into multifamily, or maybe low-income housing. Having spoken with a lot of developers, really it's much more difficult in practice to do this than it is, just strategically. For example, one developer that successfully did this in Long Beach, he told me, for every 100 office buildings, maybe one of them has the right kind of floor plate and structure to um, be positioned in a place where it can be repositioned to multifamily. So easier said than done in this. And it always costs more and takes longer than you think. For example, this developer, the cost was 25% higher than he anticipated originally to convert an office building to a, a luxury apartment building. So, having said that, the office year over year in LA down 9.2%. Really, a lot of people are still hesitant to touch, downtown LA offices. Just, it's been a real struggle the last couple of years, and that is still continuing here. Cap rates, we're seeing in that 7.7% range. Price per square foot, 322 bucks a foot, which actually seems high. You hear a lot of deals going through where there are transactions that are taking place at price points lower than what they were purchased for, you know, 5 or 10 years ago. So I'm actually surprised to see it this high in LA. Orange County, 15.9% increase year over year, 8% cap rate on average, and $252 a foot. Um, Again, average prices here, it's going to vary depending on Class A, Class B office product, age, location, all of that. Is it functionally obsolete? A lot of the groups right now are looking, if you're looking to move your headquarters and take advantage of lower office rates, you're trying to move into a higher end office and level up and take advantage of some pricing now. Uh, Inland Empire in office, 14.5% uh, sales volume increase year over year, 8.9% on the cap rates, and 193 bucks a foot. San Diego, look at this. Again, have to dig in further on here and see what caused this. Was there some large transactions that skewed this, but up 121% year over year in the office space, and average cap rate 8.3% and 286 bucks a foot. 3.5% transaction volume as a percent of total addressable market, which is a pretty high number. Hospitality, so we're looking at